What's up, traders? Matt from the Trade Brigade here doing a technical analysis on our FANGMAN stocks. That, of course, stands for Facebook, Apple, Netflix, Google, Microsoft, Amazon, and NVDA. On the left-hand side, as always, we've got the daily time frame chart, and on the right-hand side, the 30-minute intraday time frame chart. First one up on the chopping block is none other than F for Facebook or Meta platforms. What do we see on the daily time frame? Certainly a gap and go, right? You get the sense that we opened on a gap up from Monday's session, and it was off to the races. If we take a look at the 30-minute just to see how the price action actually unfolded, a little bit of a spike, but look at this, how we never violated the opening range low. If you were to look at this on a smaller time frame, as a matter of fact, let's just do it for the sake of exercise. If we look at the 5-minute chart, notice how we do have this opening range. It's actually a descending triangle. All of these lows held, and then it was off to the races. So that's a fairly bullish implication. The fact that even with lower highs, descending triangle and flush point in place, the sellers were unable to crack that low and take it for the gap fill. Remember that in here, there's virtually no structure. We have not traded in that area, right? So it should have been fairly easy for the sellers to make that happen. And the fact that it didn't is just speaking to the strength of the buyers. Let's go back on up to a 30-minute time frame. Check out how we actually closed. How is today's activity? You'll notice we got a nice run higher, reasonable pullback, run higher. So to me, beautiful activity on the intraday session. Plenty of give and take. And again, with the morning volatility rather that we saw, not cracking the lows strikes me as bullish. The pullback here held the 38.2, bullish implication. If we come on all the way up to the highs, notice also your 38.2 is the prior high of day, right, from the afternoon and here, the breakout point. So to me, that's an ideal location where the market may want to find some consolidation above. That's 229 in the short term, right? So if that holds, look for continuation here up to the top of our daily range. We know that target is 235 roughly, and the 50 SMA blue line on our daily time frame chart. If there's going to be a turnaround, the short is really probably back down underneath. Oops, let's switch tools and try that one more time. This level right here, not only was it the opening range high, it was also the pullback low, obviously, around 228. So if that gives up, maybe that's your heads up indicator to say, hey, maybe we're going to come back down and fill the gap, come back down closer to the trend line. 224, 225 could be reasonable depending on, when this ultimately does decide to unfold. Is it early tomorrow morning? In that case, it might be a little bit lower, right? 223, excuse me. And if it's later on in the day, maybe it coincides for a super support at 224, literally. So that's what I have in Facebook in terms of pullback levels and interpretation of today's activity. Has to go to the bulls. Strong move on the gap and go. Let's continue along and talk about AAPL for Apple. Nonetheless, what is this? Day number 11, straight to the upside, higher high, higher low. Unbelievable. The move is absolutely unbelievable. I'm going to stick to what I've been saying the entire time. For swing traders, now is not the time to be chasing this. Not only are we now extended through this set of highs right here, we're rapidly approaching the all-time highs. And to come all the way from 152 to 182, a 50 point, or not quite 50, excuse me, a 30-point move. I mean, unbelievable stuff. The risk reward cannot be in your favor. Getting long here, looking for this. Where are you going to place your stop loss? Is it under the gap fill? I mean, that doesn't make sense, right? If you're targeting this, the high resistance, and your stop is underneath the consolidation lows, the gap fill from this morning. I mean, look at what that looks like on your daily time frame. That's less than a 1-to-1 risk-reward ratio. Can't be taking trades like that sustainably in this type of marketplace. I'm not saying Apple's short. Don't misunderstand what I'm saying. I'm not saying Apple's short, but I'm saying long-sided risk-reward is not favorable at this point in time. So what are we going to do about this price action is, of course, the question. On the daily, if it does move higher, 181 is where we're going to start looking for turnarounds. If that happens, great. Look for pullbacks. 177 is going to be your first level, and then the gap to fill underneath. Let's talk about that gap now. If we do something, let's switch tools, all over the place with the tools. Zooming back in. So that gap is underneath today's low of day, 176.40 we'll call it, fills down to 175.64. Are you going to trade for that gap range? Absolutely not. Instead, on the 30-minute, what I would be watching for would be a move here, and then do we support at the gap fill, right? That's a reasonable little pullback that could unfold over the course of a day or two. And if that happens, are we going to find support there for a higher low and then continue back up towards the highs? That to me is much more reasonable. Once we have some sort of pullback that's been established, it's fine. Stop goes here. You're long on the turnaround. If you get some sort of hammer candle, right? Take out the highs. There's your long entry. Stop underneath the low of wherever it is, and then you're targeting the all-time highs. That to me is a much more reasonable way to be trading Apple here up at these highs. Don't get me wrong. Intraday scalps, absolutely trade both sides. In terms of poor trade location, also don't misunderstand that I'm referring to people who might have like a 5 to 10 day time horizon with their options contracts. For intraday scalps where you're holding, maybe 15 minutes to an hour tops, I'll put an H here for hour, fine, trade either direction. It doesn't really matter, but you do need to have in the back of your mind there's opportunity for liquidation break and aggressive pullback to start unfolding. So be mindful of that here in Apple. Anything that breaks down further than the gap, I'm not so concerned with this low in here anymore. We're going to remove that. It's all about 171. If I scrunch up the daily, you'll remember we had support, resistance led to a breakdown, right? So that's 171. Also in terms of how it looks on the intraday, a little bit of a pullback into that area here, right? Boom, and then back off to the races. So 171, and then the more important one is 167, coming from this level right here. We had support, break, retest, respected as resistance. So that has many more technical data points as opposed to the 171. I'm not saying we get all the way there. I am just saying that that's a reasonable number that I would pay attention to if a larger pullback does develop. So that's Apple in a nutshell. FAN for NFLX is going to continue us on the path of the FANGMAN companies and getting a breakout of the daily bull flag, right? You can clearly see we gapped up and over my alert, so we're going to get rid of that. Regardless, right into the 50 SMA, right into our target at 397. Fantastic. This sort of panned out exactly as we discussed in the pre-market live stream over on the main channel today. We had 3 hammer candles back to back, all respecting the low end of the range. We got follow through. Did the gap fill? Not all the way. That's a bullish indication. Even when it did, when it came into yesterday's highs, right around this area, what type of candle printed? Hammer candles. So how do you trade that? Well, long up and over the highs, target high of day, stop is just underneath wherever your entry was based on the opening range, right? So, could have put a stop here, could have put a stop underneath the lows, although that does not really give us the best risk reward unless you had a longer time frame target of that 397. If you did something like that, fine, long here, to get into 397, stop here. That makes total sense, right? There's your risk. Here is your reward. I would say that's at least a 2-to-1, maybe 2.5 to 1. That's much more attractive, right? So that's how you would potentially play these types of setups. How's the pullback? How's the intraday activity look? Extremely healthy, right? Look at this hammer candle right here, long over the high, target that 397, stop goes under the low. Again, think about risk reward. That's a nice 2-to-1 type risk reward ratio. If you can move your stop to break even, fairly quickly, fantastic. So to me, nice activity here inside of Netflix. The next question will be, now that we're coming into resistance, is does it produce a significant pullback, aka do we take out this level right here? This is really what you want to watch out for around 388.50 because opening range high, pullback low from the afternoon. Sure, we're getting an aggressive pullback into the close. Market on close volume is fairly high, but nonetheless, if we remain above that, this is, in my estimation, continuing on its bullish ascent here, trying to get out of some of these lower levels. So Netflix poised in a bullish manner, watching for continuation and follow through from this breakout. We've seen plenty of consolidation here. This one does not feel as chasey as something like our Apple. Let's continue along and and also we should talk about downside. Let's say this breaks. That's more of your heads up to say, okay, maybe this turns into a look above and fail, right? If this breaks, that's your heads up warning, back down underneath this 382.75, maybe it's a move back down to the bottom end of our daily balance. Again, the buyers strike me as being in control. You can see an uptick in volume as well down below. If I just move that higher volume off to the left, there you go, an increase in volume on the breakout day. To me, buyers seem to be in control, but I do want to at least acknowledge that if this breaks down, that would be sort of something to keep in the back of your mind, the look above and fail from this daily range, right? Something that does this, targets the bottom end of the range here. So Netflix, let's call that one a wrap. G is for GOOGL, Google. What's going on in the good old Goog? You can see breaking out of a multi-day consolidation period from right around in here. However, note the difference. This candle is much more weak compared to what we've seen so far in a majority of our companies. This is certainly an inverted hammer. It's happening at the top of a range. It's happening at resistance. To me, this is a primary candidate to start watching for more significant pullbacks. And if we take out the low of today's session, look for shorts to travel back down to here. The next significant support, 2760. I would actually call this one as well. Around here at, well, let's call it 2,800 for round number's sake. So short under the low for this, stop can go over high of day or just above this level, noting that we closed right on it. Okay, so coming from resistance here, closed right on it. If it's short underneath the low of day, you could put a stop just above that 2,850 and target 2,800, right? So that to me would make much more sense from a risk reward perspective. And even if you're targeting the larger move to in there, stop can go over today's high of day, giving it a little bit more wiggle room. So that's what we see inside of Google, more of a bearish implication just based on how the daily bar shaped up. But ultimately, I mean, don't forget this rally here, extreme strength from the buyers. We've already seen an example once where a inverted hammer was gobbled up. And by that, I just meant move higher. But the difference between the two is that this happened inside of a day's range, and this is happening at resistance. Okay, so that is a significant difference. Location does matter in terms of candlestick analysis. Let's take a quick look at our 30-minute intraday time frame. This is fairly telling as well in terms of how today's action actually unfolded. Notice that you have a pop on the open, so anyone who got suckered in long on this initial drive higher, thinking, okay, the whole market's gapping up, the move's got to be higher, they sort of get chopped around, and as we come into the close, if they don't feel like holding overnight for, headline risk, then they close out, right? They never got paid on the day. So not only do you have shorts that were trapped, longs that were trapped up at the highs of day, but you're also getting a break of a support trend line. You're finally putting in a new lower low. And again, that results in your inverted hammer on the daily. This is looking much more like an attractive setup to the downside for some sort of pullback to develop. Again, that first target is coming from the 2-day lows right around in here. You can see that level is roughly your 2,800 if we start cracking underneath. Today's low, 2,850, 2,840. There's your trade, right? So Google looking good as a short candidate. Anything underneath, watch for possible pullback buying opportunities, right? Just because we're looking for pullbacks to occur doesn't mean we're, there's two ways, there's always two sides of the trade, right? You could either look to short it and take advantage of this move, or you could look to be the pullback buyer. So if you start to see hammer candles that print down here and decision dojis that print down here, maybe it's long up and over the highs on the pullback for a move back up towards the highs, right? Stop goes under the low of days here. So there's a number of ways to play these setups, but Google does look like it could be in store for some sort of pullback. Let's continue along and keep things moving here. MSFT Microsoft is up next for the M in FANGMAN. What do we see here? Nice full gap fill. Okay, so structure has been repaired here inside of Microsoft, unlike some of the things that left gaps unfilled. So what do we see on the daily? Confirming that 311 is support, gap fill area is support, prior resistance now acting as support, bullish indication. We've closed up at the highs of today's session, just like everything else that's sort of extended to the upside. Is this in a chasing position right now? Not really. You have resistance coming in up here around 320, 318. Are you going to trade long for this? And again, where's your stop go? Does it go underneath today's low of day? That automatically doesn't make sense. Inverted risk reward in a negative 2-to-1 ratio, right? So that doesn't really make too much sense. I wouldn't really be following this one too much for long-sided ideas. Again, scalps are fine, but longer-term positioning for upside doesn't really look friendly at this point in time. Let's take a quick look at the 30-minute intraday, see what else we can learn about the action. Again, beautiful hammer candle. Could have been long over the highs, the recapture of 312 or 311, back off to the races, stop under the low. Again, the target would have been up here around 318. We never made it there, but the long setup was there. And the more conservative entry would have been the break of this after we confirm it as sort of a flag activity, higher low. From here to here, break of it ran into the end of the day. So good setups on the 30-minute. The bulls do seem to be in control. This does not strike me as a stronger seller. Just a little bit of inventory correction as the entire market sort of pulled back a little bit, and then it was just back off to the races, right? Buyers stepped right back up at yesterday's high. We continue one time framing to the upside. Everything here is still in the courts of the buyers. And again, scalps to the upside, fine, but longer term positioning, I would start to be a little bit skeptical here inside of Microsoft. Let's just quickly find a target up and over 318 because we haven't identified one yet, or we probably removed the old level, to be quite honest with you. I would start thinking about this in here, notably because we have thin structure. This is really what I'm talking about right here. 326.40 might be a level. Ideally after that, to be quite frank, it's all the way up here around 345 all-time highs inside of Microsoft. So structure on the way back higher is going to be quite thin. I'm not saying that this just rallies immediately like this, but there's not a whole lot of significant resistance that we experienced on the way down. Maybe this is a set of lower highs as well. That's probably the more appropriate level, to be quite frank. Let's try to put that one on there around 323. Yeah, I would watch out for that one as well. So those are your upside levels, but predominantly not a whole lot of structure up in here as that sell-off began. Microsoft could be, after a period of consolidation, right? After a period of consolidation, after a pullback, could be looking really promising to move back stronger to the upside here. Support trend line is still intact. Higher low pullbacks do want to respect now the prior top end of the flag at 305. As long as we're above 305, fantastic here inside of Microsoft. FANGMA for AMZN is going to be our A in man. What do we have here? A red candle. Okay, so unlike everything else, sure, it did close as a hammer. We're slightly up off the lows, but we were not able to close above the opening print, which is fairly telling as well. This one's been fairly extended to the upside. Sure, you could call this some period of consolidation, but noting that we've recaptured that 3176 and the importance of that level on the weekly, all in one fell swoop without any significant pullback so far, maybe this one's starting to run out of steam a little bit. You'll notice that we just went sideways on the 30-minute time frame. You can see, lower off the open, sideways, a little higher, a little lower into the close. Really really neutral activity. It doesn't really strike me as being in full control of the buyers at this point in time. Don't get me wrong. There's no aggressive seller, but it's more neutral, right? This is a much more neutral stock in our FANGMAN lineup as compared to many other things that we've seen so far in today's video. So watch out for the 200 SMA, 33.35 to be a pivot. If we're above that, fine. Look for it to get sideways into the support trend line, then maybe it puts in enough consolidation for some sort of breakout. If it breaks down underneath that level, it's failing this breakout from the 2-day highs right here, and I would imagine the support trend line could be in store sooner rather than later. That could coincide nicely with some of these lows closer to 32.50 from the 30-minute perspective. We talked about the sideways nature. Just start using this level as a flush point around 33.67 it is. So that would be your advanced heads up. So if we take this out to the downside, there's your heads up, and then 33.35 starts to become the more aggressive short back down into the support trend line. Next and lastly for N is going to be NVDA. There we go. Oops, N, not M. NVDA. There we go. Wow. All right, NVIDIA, what do we see here? Nice filling of the gap underneath, respecting the 3-day highs, closing as more of a doji. So this is certainly in the bull camp, nice structural repair, but the momentum is certainly slowing down. This one's been up very aggressively. We're coming into a known area of resistance. We had this lower high in here. That's at 287, the top of the 3-day balance as well. So on this one, it's patience. I would say it's not really a short because look at all these lower wicks that are stacked in here. Buyers are clearly responding at the top of the prior 3-day range right here. They push it back higher, but I'm not sure if it's an easy long. This one doesn't strike me as an easy long, noting that we're kind of getting a little bit of hang up here. So if we do go sideways, fantastic. More consolidation is always helpful. And then some sort of break over the course of time becomes much more attractive to get us closer to that 312. That would be a great trade here inside of NVIDIA after some period of consolidation. Again, don't get me wrong. Where's the risk reward here? At this point in time to the long side, I'm not seeing it. Maybe it's long here looking for that breakout with a stop back down underneath the 3-day balance highs. That might be reasonable, but your target seems a little bit far-fetched at this point in time, looking for it to get all the way into that 312.34. So to me, probably a patience play. I really want to see that development of consolidation here inside of NVIDIA before looking for that long opportunity to the downside, breaking underneath the 3-day balance highs at 283 strikes me as being more bearish. That's a look above and fail on our daily. We know the target should be the bottom end of the range here at 272. After that, well, 272 is important, not only because it's the 3-day balance lows from in here, but it's also the 2-day balance highs from right around in here. So a lot of confluence around that 272 level. That's an important one, but if it cracks, look for the bottom end of the prior range at 258.77. So that's what we've got in our FANGMAN lineup. If you enjoyed today's video or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.